We are now live, and we have a number of attendees who are joining us. So we'll give everybody a minute to get logged on, and then we'll get started. Good afternoon and welcome, everybody. We're giving everyone just a couple more minutes to get logged in, and then we will get started. Okay, well, we've got a few more people logging in, and that's okay. We want to welcome everybody to our first webinar. We're calling CommunityConnections. My name is Steve Jewell. I work with CommunityGiving, and we are a collection or collaborative of several community foundations all working together. And given the challenges that everyone is facing right now, we first want to say thank you to all the nonprofits who are on the front lines, delivering your services and dealing with all these challenges that are facing our communities. We wanted to stay in touch and wanted to be accessible. And so we've started these webinars that we will be doing once a week on topics that are hopefully of interest. We're open to ideas also if you have ideas on topics that you'd like us to cover. We're coming from remote locations all across central Minnesota. And so we're really delighted to have all of you join us here today. We would ask that you keep your microphones on mute, and that if you have some questions as we go along, feel free to use at the bottom of your screen the Q&A. Just please submit your questions. We're going to reserve some time at the end for those questions. And we're very fortunate that even though they're incredibly busy, that 3 professionals from our local area have committed to coming on this and sharing with you their expertise. And so I'd first like to introduce Annette Benson. Annette is a partner and the nonprofit specialist with Conway Duth and Schmazing, and she's based out of Wilmer. And so Annette, please welcome and thank you for joining us today.
Hello. Hopefully I'm doing this right. Haven't done this before, so can you see me okay?
Yep.
Okay. So as you mentioned, my name's Annette Benson. I'm a partner in the CPA firm of Conway Duth and Schmazing. We have 5 offices in various towns. And I'm a CPA and a certified fraud examiner. And I'm going to talk a little bit about the loans part, but I'm not going to spend as detailed time on it. There will be some repetition between all of us talking, but that's okay because this is complicated stuff. So I'll talk a little bit about the loans, and then I'm going to add a little bit of info. We decided that some of the payroll related issues that are part of the act would be beneficial to know too as you're going through the process of deciding if you're going to do any of these loans. So I'll go ahead and go through my slides here. So a lot of clients are calling and they're struggling with all these things getting thrown at them of different programs and trying to discern which one is the best option for me. So kind of an overview, high level thing to think through when I talk to my clients is, well, the first thing I have them do is call their lenders and ask if there's some deferral programs or something out there, because they already have a relationship with the bankers and the bankers want them to stay in business and they care about them too. And so there might be some easy things to do without applying for some loans, but that might be the first avenue to approach. And then secondly, let's look at the programs here. So the first one is called the Payroll Protection Program, and that's designed 100% for trying to retain your employees and to keep them on your payroll so they're not going on unemployment. So there's various reasons why you would do that. You want them to be earning as much as they did before versus being on unemployment. and you want to make sure they stay your employees and don't go job hunting somewhere else because you want to keep them on. So that's one thing to think about for that. Then there's something called the economic injury disaster loans. And those are kind of more for a working capital type loan. There's no restrictions on it has to be all payroll or anything like that. And so the first loan I talked about, the PPP loan, that you work through your lender. There's an application, and we'll cover that a little bit more later. And then the economic injury disaster loan, that one you apply directly to the SBA on their website, sba.gov. And then the last thing that we added here is employee retention credits. There's some various payroll tax type credits that you can utilize without applying for any loans, and those are for keeping employees on too. So we'll go on to the next one. So as far as the Payroll Protection Program loan, the other gentlemen are going to be covering these two in a little bit more detail, so I'll kind of just give an overview on it. So this is, nonprofits do qualify for this as long as you have 500 or fewer employees. As I mentioned, the main objective of this loan is to prevent workers from losing their jobs and going on unemployment and things like that. So in this particular one, the use of the funds has to be for 75% of it has to be for payroll costs, which includes some benefits and up to 100,000 of wages. And there was some question on that, and I saw a news release last night that does the 100,000 is just for the wage part. You don't have to lump in their benefits too and limit those to the 100. It'd be up to 100 for an employee plus their benefits. So it's mostly for payroll, but the other 25% you can use for utilities, mortgage interest, interest on debt that you had existing prior to February 15th. It can't be used for compensation, as I said, over 100,000. It can't be used for the FICA taxes, and there's railroad tax and things like that. But the main applicable thing, probably for most nonprofits, would be the employer FICA costs can't be included, and it also can't be used for any employees that reside outside of the U.S. They have to be U.S. based. The amount of the loan can not, or how the loan is calculated is taking all those costs we talked about, and Eric is actually going to walk through an actual calculation, so I won't spend tons of time on that, but basically you come up with your average payroll and then take that times 2.5, and that's the maximum loan that you can get. And then the total overall cap is $10 million. The terms of the loan, the statute says it can be up to 10 years, but they've made it right now to 2 years. The maximum interest rate can be 4%, but it's 1% now. There's no fees, there's no prepayment penalties, there's no collateral or personal guarantees, and the payments don't start for 6 months. And then usually if you've gotten an SBA loan before, there's a clause where you had to not be able to get credit elsewhere, and that's waived for this as well. The other loan that we talked about, that's right through the SBA, that's the economic injury disaster loan. I think they're calling it EIDL is the acronym for it, but and then there's a grant piece with this, and if you've seen any of the info on it, and I have it on here that you can get an advance up to 10,000 once you apply, and it was supposed to be dispersed within 3 days, and now I saw last night that they're talking about making the advance $1,000 per employee instead of a flat 10,000. So I'm waiting to see any more details on that. But you have to have fewer than 500 employees also for this, and nonprofits do qualify. The loan amount can be up to $2 million. The interest rate is fixed at 3.75% for businesses and 2.75% for nonprofits. And the term can be up to 30 years, so it's a lot longer time. You had to be in existence as of January 31st. And let's see, that loans that close before December 31st, credit decisions are based on your credit rating, and there's no personal guarantees, which normally the nonprofit probably wouldn't have that anyways. And then the grant part, that 10,000 I was talking about to advance, that does not have to be repaid. It is forgiven. The advance payment is to be used for paying sick leave to employees, maintaining payroll, meeting your increased costs for materials, making rent payments, and just covering for lost revenues. So that's kind of the two loan programs. One thing to note is that if you apply for both the EIDL loan and the PPP loans, and if you use some of the EIDL money for payroll, then that has to get rolled into the PPP loan. So you have to be aware of that. That kind of covers the loans. And then another piece to the whole CARES Act that I think is helpful is there's an employee retention credit for employers. And so you can be eligible for partial refundable credit if your operations were fully or partially suspended because of COVID shutdown order, or if your gross receipts drop more than 50% compared to last year in the same quarter at the same time. So what's covered in this for, you look at if you have more than 100 full-time employees or under 100, and there's definitions all over about what's a full-time employee or the full-time employees calculations, but we'll just assume it's head count for now. So all the employees' wages qualify for this credit when the employer is open for business or subject to a shutdown order. The credit is for the first 10,000 of wages that you pay on each employee. And it's for wages incurred between March 13th and all the way to the end of the year in December. These wages would be included. The goals of the program is to provide refundable payroll tax credit, so to kind of get cash in the hands of the nonprofits quicker than maybe a loan. The credit is provided for the first 10,000 of compensation, and it's 50% of what you pay for each employee up to 10,000. So it's a $5,000 credit. And then if your organization has more than 100 employees, the wages will be considered qualified when they're paid to employees when they're not providing services due to COVID. And I have my my partner that's a payroll manager here too. So if there's more questions on that, she's been in deep dive in that the last few weeks. So we'll get her in on it too. There's another provision in the act where when you're an employer, you match Social Security taxes, and it's part of it comes out of your employees' checks. And so there's a provision in here if you want to, if you're tight for cash flow, that you can actually defer paying that over the next 2 years, the match part. If your organization receives some loan forgiveness though on some of those other loans, we just have the Payroll Protection Program loan, then you're not eligible for this delay part. So that's where you gotta think through all the options. If the credits are better, the loan forgiveness is better. Just wanted to point out too that, as most of you are aware, the tax deadlines got extended for filing and paying for individuals. So we wanted to double check on where we're at for the 990s and such. And there is no extension right now for the May 15th tax returns, other than if you're doing a 990T for the unrelated business tax income, that postponement does apply. And if you do, you always still can file an extension for the May 15th, like you've always normally been able to do in the past. So unemployment benefits is kind of another topic that we've been getting a lot of questions on. Payments for workers who are furloughed or contractors or self-employed are going to be getting an extra $600 a week for 4 months. So if someone is on unemployment, they're going to get what the maximum is, I think, for Minnesota at $740. Is that right, Michelle? And they'll get on top of that the $600 from the new CARES Act. Minnesota unemployment benefits. To be eligible for benefits, you have to be unemployed or working substantially reduced hours through no fault of your own. If you're unemployed for any other reason other than lack of work, Minnesota law requires you to requires you to follow the process to determine whether you're eligible for benefits. So if you look in the handbook or right on the website, there's a link there to click that says, what if I'm unemployed for a reason other than layoff? And then they'll have to walk through that. Now remember, on unemployment, all of this is the employee goes and logs in online. There's nothing the employer does. The employee is doing all of this. For accounts established March 1st or later, and when we say accounts established, that's the employee account. There's no non-payable week due to the governor's executive order. So it starts right away when they file. I had to look at Michelle to make sure on that. Simply request a payment for each week they're unemployed. And I think they have to check in every week. And normally you have to say you're out looking for a job, but in this case, the requirement is just to keep in touch with your employer about reemployment, is my understanding. So eligibility requirements for unemployment, you have to have sufficient earnings in your base period. And what's a base period? That's your benefits are based on the amount of earnings that you had paid to you from all employers during the last year, basically the last 52 weeks. It does include commissions, bonuses, overtime, vacation pay, severance, wages earned in other states are included, and earnings from self-employment are usually not included. You have to be legally authorized to work in the US, again, kind of tagging on the same as with the other programs we talked about. Temporary layoffs, so furloughs. To reduce costs, some employers might talk to their employees and ask them if they want to take some time off or reduce hours like a day a week or something. But if they go below 32, then they can apply for unemployment, right? Yep. So the intent is to avoid having your workers permanently laid off. Furloughs can be for one day or several days. For example, employers may require their workers to take one day a week off, or they may lay off the workers for the whole week and go every other week. This may occur once, or it may occur on a regular schedule or intermittent schedule. So tips for your employees, workers being furloughed. They may be eligible for unemployment if they're temporarily intermittently laid off, where their hours are reduced below 32. So they should go ahead and apply right away for unemployment benefits the first week they're laid off or their hours are reduced. You can't backdate your applications. You could lose some of your benefits if you do so. To receive a benefit payment or get credit for the non-payable week, they must request a benefit payment. So every applicant for unemployment must serve a non-payable week before they can receive any payments. First week they're eligible to receive a payment. To be eligible, you must apply, request the benefit, and meet the requirements of unemployment. For intermittent or reoccurring layoffs, it is probably best to continue to request the benefits, even when they're working on a normal week. Report the hours that you work and the gross amount. So that's before taxes or anything. Payments will be issued for the weeks they're laid off or hours reduced, and no payment will be made on the weeks they are working. So that's kind of the payroll stuff. And then one other thing I wanted to point out is part of the act, there's a charitable contributions provision. So even if you don't itemize, there'll be a $300 contribution amount that will be deductible on their tax returns above the line. So that's helpful to promote. And then something else new is usually you're limited to 60% of your adjusted gross income as a deduction, and they're changing that now, so it's 100% of your adjusted gross income. The only caveat with that is if contributions are made to donor advised funds, that would kind of go in a separate pool and that wouldn't count towards the 100%. If that's all they donated to, they would only get the 60% and the other 40 would carry over. They're not going to lose it, any of these deductions, but they'll carry forward they'll be suspended to future years. And then there is a increase for C corporations too. They're normally at 15% of their income can be for deduction or 10%, and that's 25 now. And then there's a provision in there too for food that's donated from a business. So that is all I have.
Thank you so much, Annette. Wonderful, lots of information. And again, if people do have questions, please put them in the Q&A at the bottom of the screen, and we're going to come back and try to answer as many questions as we can. So right now, we are going to go with Eric, and Eric Reisinger is the Vice President of Business Banking and Team Lead at Bremer. And so, Eric, if you want to go ahead and take it away, it's all yours.
Sounds great. Thank you, Steve, and thank you for everybody for joining on this, and thank you for the invite to discuss these topics with you all. I work at Bremer Bank, and as probably a lot of you know, the Bremer Bank entity is owned by Outer Bremer Trust, which you, as lots of you are probably nonprofits, probably know that name more than Bremer Bank, but we were very pleased to provide $55 million of grants to our communities throughout 2019. So that's a pretty important part of who Bremer Bank is and the good that we can do in the community for everyone. So outside of that plug, I would say that Annette has stolen a lot of my thunder here. She did a tremendous job summarizing things, and Jeff, who is next, he's also shown me what he's going to be presenting, and he will be getting into a lot more details. And as the attorney, he will probably prove me wrong in a lot of things that I'm going to say here. So I guess one of the biggest questions that I've been getting right now about this program is whether or not there's going to be funds available for everybody throughout the application process. Unfortunately, I don't have a perfect answer for that, but my hope is that the government, if they see that this program is helpful for the economy, is helpful for businesses and employees, that they will re-up the funds, that they won't let it go get to a $0 amount. And the ones that were in queue, which we have a tremendous amount of businesses that are in our queue right now, if those businesses just are told no, you don't have funds available for this program, that's going to be pretty disappointing. So I continue to hold out hope that we're just going to be continuing to move forward with this program as it's laid out thus far. We do tend to see quite a bit of change from the SBA and the Treasury groups as far as clarifications around the rules, terms and condition changes, and things like that. So what's final today might not be final tomorrow. Kind of frustrating for everybody, but we're working really hard. We're working. The entire bank at Bremer for the business banking team was working the weekend to make sure our processes were refined and that we were pushing forward with the applications. So at this point, we have loans funded. Our first loan actually was funded at 8 p.m. on Sunday, and we have also throughout Monday funded many more loans. I'm not certain on the volume at this point that we have outstanding in our queue, but I assure you that there is a lot. We have had a lot of phone calls, a lot of emails, and so with that, I will kind of maybe go to the SBA application to give you just a quick overview of what that is, what that looks like. If you can move that to the screen for everybody, I would appreciate it. In the meantime, I guess I will continue to talk about the process. So every bank's got a different process. Bremer is currently working through a paper process. Well, actually, it's very electronic. We do everything via email and electronic documents. So we are uploading a final application, a calculator which estimates the amount of the loan, and then supporting documentation. So if I can give any advice to folks on the call that are going to be submitting an application, I would recommend following your bank's directions as closely as possible, because going back and forth has been a tremendous amount of time taken from my ability to submit applications. So just really be focused on giving as much information as possible. Make sure the forms are completed as thoroughly as possible. And in Bremer Bank's world, this form that pulled up right now is the application that we're utilizing. It goes right to the SBA. It's a pretty self-explanatory application, 4 pages long. Bremer, the way that we're operating is we are not having our customers sign this form or initial, because that happens at the end of the process when the loan is about ready to fund. We're going to do an e-signature process. So, you go through if you want to just slowly scroll through the application, that would be fine. You can see the spots where, you have to add in owners here that have 20% of ownership or not. With nonprofits, I haven't come across a nonprofit yet, so I'm not certain how that's supposed to be filled out at this second, but I'm sure I can find that answer. Just go through the questions on a very detailed level. Again, if you're doing an application for Bremer, you don't initial at this point, you just fill in the boxes. This is, if you need a fillable format of this document, I can send it to Steve, and he can distribute it to the attendees. I'm happy to do that. So I guess that kind of, really briefly covers the application. If you can go over to the estimator, it's an Excel spreadsheet. I would appreciate that. We can really talk high level on that. So this is a Bremer template for how we are helping our customers establish or determine their loan amount. So it's quite simple. You really only have to focus on this first screen right here. And you basically, and I might hear differently from my colleagues that are going to be speaking after, or different from what Annette's opinion is, but vast majority of my clients that I've submitted applications for the compensation of employees, we've used the 941s for 2019, so there'd be 4 quarters of those. We add those up and put that number into that spot. And then there's a calculator for annual salary over 100,000 that gets backed out on a different tab. And then you can subtract other items in here where applicable, or add them at the bottom. The bottom 3, line 8, 9, and 10, that's the employer paid health insurance costs. That is retirement benefits like 401ks, and then the state and local taxes. That's been most of the time that I've seen it is the unemployment taxes. So in the interest of time, that is kind of what I've got. I guess maybe I would add one more thing on this estimator. If you do apply at Bremer, make sure you provide documentation in some form or fashion for every number you put on that spreadsheet. That will speed up our process to be able to get you into the queue faster for purposes of getting you your loan faster. So with that, I will stop.
Thank you so much, Eric. Very helpful information. And again, we all know that there's so much information here, and we may not get everything covered, but we want you to know that there are local resources in our backyard that can help you and assist you. So thank you, Eric. And now to our last local expert and resource. Jeffrey Clancy is an attorney at Quinlivan and Hughes, and we're really pleased to have him with us as well. So we're going to turn it over to you now, Jeff. And Jeff, we're going to get you unmuted here. All right, we got you ready to go.
Can you hear me?
Yep, we can hear you now.
All right. Thanks, Steve. So yeah, my name is Jeff Clancy. I'm a corporate transactional attorney at Quinn Levin and Hughes, and I was asked to speak, and I appreciate it. So um, I'm gonna start off with a little background of kind of where we're at. So on March 13th, 2020, the president declared the COVID-19 pandemic sufficient in severity to warrant an emergency declaration. And then, as we know, on March 27th, 2020, the president signed the Coronavirus Aid, Relief, and Economic Security Act, or the CARES Act. They got the acronym in there, right? To provide emergency assistance and healthcare response. So the Small Business Administration received funding in this statute of $349 million, and the authority to modify existing loan programs and establish a new loan program to assist small businesses as well as nonprofits. And so the act temporarily permits the SBA to guarantee 100% of 7A loans under the new program. And again, I think everybody's kind of heard of the new program, this Paycheck Protection Program, or PPP, as I'll refer to as I continue through the slides. So the act provides forgiveness for up to the full principal amount as long as the borrower uses the funds appropriately. And it should be said that the forgiven amount isn't taxed. So that's one positive aspect of it. So how does this apply to nonprofit organizations? So historically, federal loans from the SBA were not available to nonprofit organizations. Now the CARE Act has reversed that stance and allows 501c3 and 501c19 nonprofits to apply to the SBA PPP. But it's a subject to SBA affiliation rules, which determine eligibility. Essentially, the affiliation rules have to do with employees, and I'll touch on that a little bit later. So the PPP loans are low interest loans, as Annette stated, at 1%. The loan principal can be forgiven entirely if borrowers meet certain conditions. And its goal is to essentially assist nonprofits to remain operational during the COVID-19 pandemic. But first, I think as a nonprofit, you're going to want to ask yourself, am I eligible, or what is used to determine eligibility? So generally, a nonprofit is eligible for a PPP loan if it was in existence on February 15th, 2020. Essentially, that's in there because we want to make sure we help the nonprofits that are being affected by the COVID-19 pandemic, and not new nonprofits, essentially. So it's either A, exempt from federal income tax under 501c3 of the Internal Revenue Code, or B, a war veterans organization exempt under 501c19. And faith-based organizations are eligible as well. So again, we're kind of going down the checklist here. Has 500 or fewer full or part-time employees. Again, they are subject to the SBA's affiliation rules. And the nonprofit provides a good faith certification that the loan is necessary due to economic conditions brought about because of the COVID-19. And 75% of the loan will be used to retain the workforce and payroll, and the other 25% may be used on certain operational expenses. Now, it should be noted that 100% of the loan can be used for the workforce, since that's the essential goal of the program. Now, the certification requirement, Eric may know about this as well. It's in the application itself, and the reason for that is there's a presumption of economic hardship here, and this differs. This is quite different than the economic injury disaster loan, where you have to actually show actual economic hardship and prove the actual amount of the loan, which I'll talk about in a second. So the loan terms. So under the PPP program, the loan term is essentially, as Annette says, for 2 years with an interest rate of 1%. That could go up to 4%, and it could change slightly. But I think if you stay within the forgivable amount or the forgivable guidelines, this 2-year 1% is essentially where we want to be. So that's if the nonprofit uses funds for payroll costs. So during the covered period, so this is important, the covered period is February 15th through June 30th, 2020. Nonprofits with less than 500 employees, defined as full-time or part-time or other, are eligible for a PPP loan in the amount equal to, and this is essentially the math equation where Eric would probably jump in, or Annette. This was taken from the SBA initial final order. The first piece, again, we want to determine what are our payroll costs, because that's essentially going to be the amount of the loan. So you take your aggregate payroll costs, which will be defined on the next slide, from the last 12 months for employees whose principal place of residence was in the United States. And then you subtract any compensation paid to an employee in excess of the annual salary of $100,000, or any amounts paid to an independent contractor or sole proprietor in excess of $100,000. And then you want to calculate the average monthly payroll. So you take the numbers from 1 and subtract it from 2, and essentially divide by 12, and you'll get your average monthly payroll. And you're going to multiply that by 2.5, and that's your loan amount. Again, not to exceed $10 million. Now, the economic injury disaster loan does play a role in this if you did apply for one in January or February. So you would want to add the outstanding amount of an economic injury disaster loan made between January 31st, 2020 and April 3rd, 2020, less the amount of any advance. And Annette touched on the emergency $10,000 advance. It's essentially a grant that does not have to be repaid, even if the economic injury disaster loan is not granted, that those $10,000 will not have to be repaid. So the loan payments are deferred for 6 months, but the interest rate still accrues. Some lenders may extend the period to 12 months, but essentially I think 6 months is where most lenders are at. Now, the first part of the equation is we want to determine what are eligible payroll costs. So eligible payroll costs is compensation, salary, wages, commission, or similar compensation, cash tips, payment for vacation, family, medical, or sick leave, allowance for employee dismissal or separation, payment for group health care benefits, including insurance premiums, payment of employee retirement benefits, and payment of state and local taxes imposed on the compensation of employees. So again, that's how you find that number, the aggregate number of your payroll costs. So what expenses are excluded from calculating the PPP payroll cost? So any compensation over $100,000 per employee, you cannot calculate that into the aggregate amount. Annette touched on this. Federal employment taxes imposed or withheld between February 15th, 2020 and June 30th, 2020, including the employee and employer share of FICA and the Railroad Retirement Act taxes required to be withheld from employees, and compensation of employees whose principal place of residence is outside of the United States. And then Annette again touched on this, qualified sick and family leave, for which a credit is already allowed under other sections of the Family First Coronavirus Response Act. Essentially, the federal government doesn't want double dipping, taking advantage of both programs. It's either one or the other. And as Annette says, I think that should be analyzed. So once we're granted the loan, what can these loans be used for? So it's the essential essence of the program is for payroll costs. So again, 75%. Again, these are minimums. 100% can be used towards payroll, but the federal government stated 75% for employee salary and wages, and then 25% for allowed operational expenses, such as rent, utilities, and we'll talk about that below. You can also use them for costs related to the continuation of group health care benefits during periods of paid sick leave, medical, or family leave, and insurance premiums. So employees' salaries, commissions, or similar compensation, again, 75% loan amount meant to retain and maintain the workforce. Again, the essence of the program. So rent would be the 25% operational expense under lease agreements in force before February 15th, 2020. So that's an important date, I think, when we're looking at these PPP loans. That can be used for utilities for which service began prior to February 15th, 2020. Interest on any other debt obligations that were incurred before the relevant covered period, which is that February 15th date, and payments of interest on any mortgage obligations but not payments on principal or prepayment fees incurred before February 15th, 2020. So what's important with the PPP loans is the forgiveness portion of it. So the borrower will owe money if you do not maintain your staff and payroll. So it's to incentivize everyone to maintain, again, your workforce. So in order to maintain loan forgiveness, you must pay attention to your number of staff. So your loan forgiveness will be reduced if you decrease your full-time employee headcount. Level of payroll, your loan forgiveness will also be reduced if you decrease salaries and wages by more than 25% for an employee that made less than $100,000 annualized in 2019. So wages can be decreased, but again, that 25% number is important. And then there is an allowance for rehiring. So if you did have to let go of employees prior to the loan origination date, you do have time to rehire those employees and take advantage of the forgiveness. So rehiring, you have until June 30th, 2020 to restore your full-time employment and salary levels for any changes made between February 15th, 2020 and April 26th, 2020. So again, that February 15th date is important. And obviously the amount of forgiveness cannot exceed the principal loan amount. So as Annette stated, the SBA does not require a personal loan guarantee or collateral requirement. This is significant, and there is no recourse unless the borrower uses funds for purposes not authorized or outside the scope of the definition of payroll costs as defined by the CARES Act. So forgiveness in sum, so no eligible borrower may receive more than one PPP loan. It's anticipated that we may have several rounds of these stimulus packages. We don't know that yet, though. But in the event that there are additional rounds, once you receive your PPP loan, that's your one and only loan. So you want to make sure you maximize that amount. So there are the forgiveness penalty. The amount of loan forgiveness is reduced proportionally by any reduction in the borrower's workforce and/or using loan amount outside of payroll costs. So in other words, the loan amount will be forgiven as long as the proceeds are used to cover, again, the payroll costs and the allowed operational costs. But this 8-week period is important. So it's over the 8-week period after the loan is made. And again, maintaining employee compensation levels, which is essentially the goal of the program. So this is, as far as affiliation, the SBA released a religious exemption to affiliation rules that states the relationship of a faith-based organization to another organization is not considered an affiliation with the other organization if the relationship is based on religious teaching or belief or otherwise constitute part of the exercise of religion. So this is important when determining nonprofit PPP eligibility. So if there is a relationship with a faith-based organization, as long as it's for the purposes of exercising religion, then you don't have to count that as an affiliation. However, if the faith-based organization relationship is based on any purpose other than exercise of religion, the affiliation rules will apply. So the affiliation rules are used to determine eligibility, essentially number of employees. So under the SBA rules, entities may be considered affiliates based on factors like ownership, and basically control. So affiliation is a crucial aspect of determining eligibility. So if funds are misused, there are penalties against that. Borrower uses funds for unauthorized purposes, the SBA will direct you to repay those amounts. If the borrower knowingly uses the funds for unauthorized purposes, you will be subject to additional liability. And of course, if one of the partners or uses any of the amounts, there could be liability there. So Annette touched this. I'll try and get through this quickly for the sake of time. But this is the other option. The Economic Injury Disaster Loan Program is essentially different than the PPP, where the PPP has loan forgiveness and where the EIDLP loans do not. So the EIDL borrowers must show actual loss due to COVID-19, where PP has that presumption. And this is significant. So only entitled to borrow the actual economic loss, less any insurance proceeds up to $2 million, where the PPP program has a maximum of $10 million. There is that $10,000 emergency advance, however, for applicants that request it, and that is not required to be paid back. It's essentially a grant. So the CARE Act does waive the requirement that the applicant shows that there's unavailable to receive credit from a different source. That's significant. And the SPA clarifies that religious organizations, again, are eligible. So you can use the EIDL loans to refinance, or the PP loans to refinance an EIDL loan if you took one out January 31st, 2020, through April 3rd, 2020. But if you used it on payroll, that's significant. So if you receive the SBA loan from 1/31 to April 30th, you may apply for a PPP loan. And if your EIDL loan was not used for payroll cost, it does not affect your eligibility for a PPP loan. But again, if that loan was used for payroll, your PPP loan must be used to refinance your EIDL loan. So the SBA does not require personal guarantees for EIDL loans up to $200,000, but there is the collateral aspect which differs than the PPP. And the applicant, again, must show some capability to repay. The term is for 30 years. Again, I probably won't go through this. Interest rate 3.75, nonprofits at 2.75. And so there are some clarifications that needs to be done through the SBA. So I guess I'll say that we're still looking for the SBA to clarify again what payroll costs and compensation is. Although I think compensation in the act, it discusses salary. So key takeaways. The CARE Act expands eligibility period for businesses suffering from economic injury from the COVID-19 from January 31st to December 31st, 2020. The CARES Act broadens eligible businesses for EIDL loan, as well as including nonprofit eligibility for PPP loan. Again, the PPP loan is 2 years, 1%. Applicants have to make a good faith certification. And again, the PPP loans are forgivable. Payroll costs can be used to cover 100% of employee compensation and salaries. And this is my contact information. I tried to blow through it there towards the end. I know I had some time issues, but if you do have any questions, please feel free to reach out. And I did draft an alert for the firm on the CARES Act specific to the SBA loan, and that link is below if you'd like to read it.
Wonderful. Thank you so much, Jeff. Lots of great information. And again, as we said, this is unfortunately, we put this into a 1-hour webinar, and unfortunately, there's just not enough time to cover every detail. But that is why we are going to make sure these slides are available. We'll email them out. Also, all the contact information will be available from our panelists so that they can respond to questions you might have. We have a very short time for some questions and answers. Down at the bottom, you can actually submit questions, and already some of the panelists have answered some of the questions raised. So Sarah Carlson has been assisting in looking at questions. Sarah, do we have a question or two we could answer yet in the time remaining?
Yes, Steve. I think one of the ones that would be helpful from Eric would be, what timeline can businesses expect when they are applying for the EIDL funds and the PPP loans for distribution?
Yeah, I wish I had a good answer for you. Probably the easiest answer is trying to make the process easiest as possible for your bank to move things through on their end. So simplicity is king. You know, in our case, where we're asking for information to be really detailed and kind of lead us to the numbers in the spreadsheet. You know, I've seen some customers put together a Word document. You know, if they send me their tax return, for instance, to get a health insurance cost off of the tax return from 2019, they'll send me the Word document that says, hey, look at page 3 of the tax return and pull that number off of there, and so forth with all the other data. But I guess the best explanation I can say is we started taking applications on Friday at noon, and at 8 p.m. on Sunday night is when we first funded our loan. So that's not what, you know, we have had a flood of requests as of Monday and Tuesday. We had requests throughout the weekend as well. So our queue has certainly filled up. I do have friends at U.S. Bank that said that over the weekend they had quickly accumulated 23,000 applications throughout the country. So Bremer is a lot smaller. We have our entire team. We've had our consumer bankers helping. We've had our private bankers helping. You know, everything is all in the interest of helping customers get these funds. So I wish I could tell you a number, but I would probably be wrong. But I guess I could guess at 4 to 5 days.
Thank you. We have a follow-up question, and that is, do you have to take the whole loan amount calculated on the spreadsheet, or can you take less?
I personally am recommending that if you qualify for a dollar amount, that you accept it. It's really no detriment to you as a business or a nonprofit, but do a very, very good job of tracking the expenses that you're utilizing those funds for. And if at the end of the day, at the end of this 8-week period where you have to use those funds, if you haven't used them, you could use those funds to pay off the loan or that component that is not forgiven.
Thank you. I want to let everyone know too that if you open that Q&A box, you can see open questions and answered questions. So your question that you posed may have been answered by one of our experts, and you can see that. And I think at this time that closes all of our open questions. Steve?
Thank you, Sarah. We are now going to turn to a bit of a wrap up and give first Kathy Grakow, who is the Director of Community Programs, a chance to talk about the response funds that have been established in our communities that we work in and how to access those funds. And we're going to conclude with very brief comments from each of the executive directors in the various markets we serve. So let's start with Kathy Grakow. Kathy.
Thank you. We know that there are significant increased demands for our nonprofit partners, and we thank you for rising to that challenge in this tumultuous time. And we will do our best to support your efforts. We would invite you to apply to our response funds created by each of our foundations using their unrestricted dollars, and are grateful for the dollars that have been leveraged with additional dollars from a grant from the Minnesota Council on Foundations Response and Recovery Grant. When applying for those response fund grants, please be sure that you are applying to the foundation that represents your geography. Each foundation has included their guidelines and focus areas eligible for funding. Be sure to review those before completing your application. You will create an account within our grant making system and apply online using an application that will easily capture your information and needs. There will not be any reporting requirements for these grants, but we would invite you to share your stories through the Idea Center located on our website. This is a place for organizations to share ideas and information across our communities. Grant committees in each community are comprised of community representatives and other funders to ensure we are using the funds prudently. The grant applications will be reviewed on an ongoing basis in order to release dollars to you as quickly as possible. Please go to our website and click on the COVID-19 link at the top, and you will find the response funds listed for your respective foundation. Steve, back to you. Thank you.
Thank you very much, Kathy. We now are going to go to Wilmer and Sarah once again, Executive Director of the Wilmer Foundation.
Good afternoon, everyone. As Steve mentioned, I'm the Executive Director for the Wilmer Area Community Foundation and the Sauk Center Area Community Foundation, and we want to thank you all for joining us today. We are so appreciative of the work that you each do in our respective communities and your commitment to doing even more during this challenging time. You're going to hear a brief message from each of us as the executive directors about the work that we're all engaged in, and then a little bit of a spotlight on our response funds. We encourage you to connect with us if there is ever any time your community foundation could be of assistance. So in Wilmer, our response fund is active. It is open for applications. We currently have about $150,000 assembled, and it is growing as folks connect to the fund. Our foundation board has elected to suspend our current grant round and divert all unrestricted grant funds into this effort. We will be reserving about 25% of those resources in Wilmer's case for post-emergency needs. Our applications, as Kathy mentioned, are reviewed weekly, and the priorities are outlined as Kathy directed you. In Sauk Center, our response fund is also active. It's a little bit smaller. Today, it has about $10,000 available, and they will begin reviewing applications next week. So now I will turn it over to my colleague Holly in Alexandria to share what they're doing with their fund.
Thank you, Sarah. Yes, I'm in Alexandria. I'm Holly Witt, and I'm in the home of Big Ole. We have had quite a time here in Alexandria. As many of you probably are aware, in February we had a fire in our downtown area that destroyed 5 buildings, and so we actually created our response fund after that fire. So it's been up and running for about 6 weeks. We were now redirecting fundraising toward the COVID-19. We have about $32,000 right now, and we are continuing to fundraise for that. But we, as Kathy mentioned, the grant round is open, and we will be reviewing grants next week. And again, it will be ongoing, depending on money that continues to go into that fund. But we're hoping by next week to be releasing a grant or two for COVID-19. One of the things I just want to mention briefly, when people think of foundations, they think that we raise money, we give it away. We do that. But you'll also find that we are highly involved in our communities. We're collaborating with community partnerships. We're making connections with folks in our community, with leaders, with civic and business leaders. And we convene meetings, and we're involved in our community. And we feel like it's so important to be working together, and especially now. We are one partner at the table with many. We have deep relationships with United Ways and other initiative foundations, nonprofits, and so we're working together. And right now we're working to solve a short term, we hope this is going to be a shorter term, but we're here for the long term. Community foundations were created to be long term, so we are here as a partner in the communities to really help build strong communities. So that's why we're here. With that, I'm going to turn it over to Carl.
Can you tell her, give her my cell phone number?
Okay. Somebody needs to mute their microphone. That's on a phone call. We also suspended our current grant round and rolled those funds into our response fund. So with the MCF contributions and the donation and that rollover, we started with about $90,000 in that fund, and we've made so far $30,000 in grants. We did a YMCA grant for a day camp for essential workers, supported a mental health support program, and also a prepackaged 20,000 meals of prepackaged dry food. So we're seeking projects that address the impact of COVID-19 on our neighbors and our community, not necessarily on the organization. That's what the Payroll Protection Plan is for to deal with. We are also looking for projects that, any projects we receive by Monday evening or early Tuesday morning, we'll take a look at those by Thursday of that day, and I should get an answer to you quickly. So as Holly mentioned, we're involved in several meetings. I do represent nonprofits and the philanthropic community in our community leadership group, as well as we have a funders network. So if you have information you want shared, please let me know that and I'll pass it on. So thanks for all you do. Please stay safe. And now Carol Turnow from Central Minnesota Community Foundation will speak next.
Great, thank you, Carl. I want to just give you a brief overview of the CMCF response fund. We have about $160,000 available in our fund. We work closely on a weekly basis with the Initiative Foundation, the United Way, and several other foundations to look at what we all have in our response funds so that we are using our money collectively as responsibly as possible. The grants at Central Minnesota Community Foundation are anywhere from $500 to $5,000, and we did our first grant round review today. We also have grant response funds set up in Foley, Paynesville, and Ricori. So if you have nonprofits that are working there, you want to look to those funds as well to apply. And then I just wanted to talk a little bit about other resources for for our nonprofits. And the United Way has a really good program that helps to share out what the needs are for your nonprofit. So not necessarily the financial needs, but if you're in need of food or diapers or supplies, cleaning supplies, any of those kinds of things, United Way, your local United Way, can report out those needs, and people do go onto their site looking for ways that they can help. So all of our United Ways have that ability, so take good advantage of that as well. Next up is Steve Jewell. I'll turn it back to you.
Yeah, oh, thank you, Carol, and all the executive directors. I'm just going to comment briefly on the Carver Community Foundation for Carver County. That is another entity that we also support, and they also have a response fund, and they do have grants available. Very limited dollars at this time. I think they have about $22,000 in this first round. They're hoping to attract some additional resources to be available. So we're also trying to do what we can to find additional support for Carver County. So I think we're just going to wrap up here. We want to thank all of our speakers who were able to join us. We will have the slides available and we'll send them out. Thank you for bearing with us. This was our first attempt to do a community-wide webinar, but we think staying in touch is so important, and we really want to continue to do that. Next week, we will be featuring a webinar on accessing financial resources during the COVID crisis. And the National Foundation Center has made some access to their national resources of grants available. And Carl Samp, who teaches a grant writing course, is going to talk more about how to access some of those dollars that are out there and available for local nonprofits. All the resources, as we mentioned, are available on our website. And we also would appreciate your comments, your feedback. If you have ideas of a webinar you'd like to see, we'd ask you just to email us at info@communitygiving.org, and then share ideas out at the ideacenter.communitygiving.org. You know, we're all in this together, and it's been challenging times, but we really, really deeply appreciate the work of our nonprofits, and anything we can do to support you is what we're trying to do here at Community Giving. Thank you so much, and appreciate your time, and stay well, and have a good day.